For joining again. As Mike says, we are extremely excited and happy to have Professor William Byrnes with us. Thank you, Bill, for coming today. You're a very busy person. I don't know if you've gotten any sleep lately, but thank you for showing up for the webinar today.
Howdy. I'm glad to be welcomed.
So we're as all the Aggies know, every Aggie opens any kind of webinar, conversation, meeting with a howdy. So thank you. Earlier I tried my best at a shorthorn. So the Mav Nation welcomes you, Professor Bill, and I want everyone to know that you're our next door neighbor. You're right across the street from our UTA Fort Worth campus. So we're happy to have you on. We would have liked to have done it before COVID struck, but we kept at it, and here you are. So thank you very much. I wanted to just mention our mission here at Corporate Ed is to bring the best in executive education, given our fabulous business school and business professors. Bring the best of their research and the best we can in terms of discussion of the topics of the day, whether they be tax, whether they be legal, whether they be accounting, finance, corporate governance. We try and cover it all. As Mike said, remember, we'll be setting up our accounting and financial reporting webinars in the fall, and then followed by corporate governance in the spring. So without further ado, let me give you a background on Professor Byrnes. And yet, I really am happy he dressed up, but this is the way he dresses all the time. So, so I'm used to it. And yes, that is a seersucker suit, if anybody was wondering, and that shows off his New Orleans roots. You probably can't see New Orleans. I sound like a Yankee, Bill, probably. But anyway, I just wanted to tell you quickly about Professor Byrnes, undergrad at Tulane, JD at Loyola University College of Law, LLM at the University of Amsterdam. He's been a professor full-time for the last 5 years at Texas A&M. He is a specialist in TP and international tax, which is how our relationship started, as we're fellow travelers in terms of those topics. As associate dean in the law school from 2015 to 19, he founded the online risk, tax, and wealth graduate program in the law school. From LexisNexis, he is the author of 9 international tax and money laundering treatises. And a treatise is, 500, 600, or 700 pages long, so it's not a 30-page nutshell, if you're familiar with those. And yes, I said money laundering, so he's also internationally recognized in that area as well. Also, 2 other areas I wanted to mention. One, he is internationally recognized as an expert in FACTA, which is why we have him here today, because FACTA, the first time I saw it, I said, this is the worst, but I think I want to like it. So I think I've begun to warm up to it, but with someone like Professor Byrnes here today, we can really understand it. Personally, Bill, I think it's one of the most important things that our audience needs to understand, at least be aware of. And so we're so happy to have you here. And finally, he is a pioneer in online education. He started in 1994 with various online programs. And so when it comes to online legal education, he is a pioneer. Finally, I just wanted to say, because Bill likes social histories, he does design his own clothes. He is an influencer in the fashion field, and it only adds to his mystique. So with that, Professor Bill, let me turn it over to you and get us going with what is FACTA and why should we care?
So howdy again. I just want to make sure you can see my screen. Is everything flowing correct? Big howdy sign?
A big howdy, yes.
Great, okay. So I'm your presenter, William Byrnes, as Dr. Bill introduced me. In 2010, and we'll just get to it in a moment, there was something called the Hire Act. And the Hire Act was during a point of recession in the United States. And you remember Obama was about to be elected, or he had been elected president. The world was in this great recession, financial recession, and people were unemployed. Sounds like COVID, doesn't it? And they were looking for a way to extend the unemployment benefits. Oh my God, sounds exactly like COVID. Sounds exactly like this week. So before I get into that, I just want to point out, if you're interested in this topic after you hear it, I want you to go to SSRN, which is a free website, and you can download 1 or 2 of my chapters from this book or different articles on it. Some of them are 30, 40 pages, some quite long, 200 pages, but they're freely available and you can follow up on different elements I've talked about today. And of course, you can connect with me. So let's get into the background. What is FATCA? And I think the most apt quote for FATCA is the famous Vietnam War quote: "It became necessary to destroy the town in order to save it." So how did we get FATCA? Well, for those of us who were harkening around international tax in the offshore world, or as we like to call it, international financial centers, you'll remember back in the mid to late 80s, all the variety of scandals that occurred with the Cayman Islands and Bahamas and Anguilla. In fact, one gentleman, Jerome Schneider, had sold 1,500, almost 2,000 offshore banks from the island of Anguilla to Americans, and got a little brazen about it and went on one of these 20/20 programs or 60 Minutes, and he said, if what I'm doing is wrong, the IRS should arrest me. Well, I think it was a year later when the IRS arrested him. But there were several scandals. He wasn't the only one, and it really came down to Americans hiding money in a variety of what they call secrecy jurisdictions. The Organization of Economic Cooperation and Development, OECD. Now, for Americans, you haven't heard of the term. It's okay, because we're America. We control the world. But the rest of the world actually, lives by intergovernmental organizations. They don't have big, huge economies like we do, big militaries and so forth. So the OECD is one of these IGOs, intergovernmental organizations. And it's a collection of the rich countries, America included, Canada, all of Europe, Australia, New Zealand. And they come together and they agree stuff. So for tax, the ministers of finance, we call that our Treasury Secretary. And of course, the Treasury Secretary may or may not know anything about tax, other than he or she pays it. So they'll send the head of the IRS or the relevant person from international IRS to go over and discuss issues, somebody who actually knows what they're talking about. And so in 1998, they got together and they said, there's all this money being hidden offshore, and Cayman Islands, Bahamas, and Anguilla for the US, but France has a problem with it, Germany, everyone has a problem with it. And so they wrote a report, and the report said, bad offshore, bad offshore, bad offshore. They said, if offshore is being secret about accounts, they're not telling who has an account and who doesn't have an account, then they're harmful. And there was more to it than that, but that was 1998. 2001, remember 2001, what happened then? 9/11. So the Bush administration, for that 1998 report, Bush came into office, 2000, said, that OECD, that's like the United Nations. That's not for us. That's not for America. Let Germany and France have their fun, but it ain't our thing. And besides, we actually think that it's about American banks, not about Cayman Islands. But 9/11, all of a sudden, terrorism and anti-money laundering became very important. So the US came up with some rules. They didn't want to go all out like the OECD, but they said, foreign banks, we're going to trust you. You tell us, you don't tell us if you have Americans and all that. You just collect the money that they owe us. You collect it and send us the money. That's qualified intermediary rules, obviously. I'm simplifying it, but you collect the money, send it to us. You don't have to tell us who you collected it from or how, just tell us how much they owed us and send it. Well, you can imagine that didn't work very well. 2003, the European Union, the OECD, the United States didn't join on it. So the European Union made its own OECD-like rules internally and said, between the European Union, we're going to start to share data with each other. Country to country, we're going to share data about taxpayers. So by example, if a German has an account in France, the French government will collect the information from a French bank and tell the German government, who will then validate it against the German taxpayers' tax form. And finally, we get to 2008 and the UBS scandal. And so everybody here on this call will have been alive and practicing certainly by 2008. And the UBS scandal was, one is it's a whistleblower, two, it would have happened anyway, but about $40 billion was hidden of American assets belonging, as American taxpayers who were not compliant. And so there was congressional hearings and the IRS criminally charged UBS and so on. And that set off the chain of events that that led to the FATCA. So back to what I said in the beginning, the HIRE Act, 2010, they needed to pay for unemployment benefits. What's 180 on the screen mean? Every time an expert dating back to the 1980s, the Cayman Island stuff, every time an expert stood in front of Congress and said, y'all should do something about the problem, and Congress would say, how big is the problem? And at first the number was, every year you're losing $10 billion of tax revenue you would have gotten otherwise. Every time an expert came, every 5 years they have some more hearings, and it went 10 to 20, 20 to 40, 40 to 80, 80 to 160, until finally, the very last group of hearings before the 2010 Act, the expert stood up and said, every year, offshore jurisdictions, which are bad, are hiding the assets of Americans, and if you knew about it, you would each year, collect 180 billion extra dollars of tax revenue. Right? 180 billion. Solve all your problems. Pay the deficit, have more war funding. That's why we have FATCA. They just wanted some unemployment benefits extension. I'm saying all this because I'm going to end with, what are we discussing this week? Unemployment benefits extension. And how are we going to pay for that? Because America has a pay-as-you-go system. You want to spend money, you got to raise revenue to spend it. So they said, well, if we put into place this law that these people are asking for, IRS wasn't even asking for it. They wanted something done, but they weren't asking for what you're about to find out about. But they said, 180 billion solves all of our problems. Hey, we got to spend money that we didn't even know we had. Well, it didn't work out that way because the Joint Committee of Taxation and the Congressional Budget Office and some other bipartisan or nonpartisan people who add up how much money comes in with a revenue bill, like a tax bill, said, 180, actually, you're going to get about $8 billion over 10 years. Not 8 billion a year, 8 billion over 10 years. And once you scratch their head and go, wait a second, that's a pretty big discrepancy. 180 billion a year, maybe 800 million a year. That's like 1%. That's less than 1%. Okay. Russell Long, senator from the great state of Louisiana, he said, it takes complicated amendments to end complicated devices. The HIRE Act, the FATCA part of HIRE Act was only 10 pages. But by the time the lobbyists and everyone and the comments and were 2,000 pages of regulations later. So if we just look at a timeline, HIRE Act was 2010, and we had our final regulations in 2013. I was fortunate because I had the first book out because I had written my book based on the draft regulations. And then it was about to come out in January. And of course, the final regs came out and I had to rewrite it very quickly over the next couple months. But that's why I get to be called the expert. So, but over time, you know, what started off as about 600 pages of regs. Well, it started off draft regs about 400 pages, became 600, became corrections, add another 300. And then they had to modify regulations for FATCA required modifying the normal withholding regulations. In the United States, we call that Chapter 3 withholding. That's just normal source-based withholding. For those of you who are deep in tax, FDAP or FDAP, we call it FDAP. And so our normal withholding had to be changed. So add another 600. So add it all up, add the new forms, add the instructions to the new forms, add the notices, add the changes on the I stopped counting when I reached about 2,200 pages of new stuff. So I don't know today, but as I said, I quit counting. I quit counting around 2017. Okay, what did FATCA do? And so this is the gist of my presentation today. You don't have to be a tax lawyer to understand this presentation. This is for accountants and for like managerial accountants, because we're here at a business school at University of Texas Arlington Business. And what do accountants really like to do? Collect data. Well, okay, that's what I was saying. We're data and processes. Managerial accountants like to do processes, but accountants collect data, right? You collect data and you put it in the right form. Lawyers like to tell you what the box means, but accountants actually collect the data that goes in the box. And then, as I say, managerial accountants make processes, or regular accountants too with technology make processes. FATCA made a two-form world. Now I'm going to show you lots of other forms to bring it home, and you're going to recognize most of these forms. But these two forms you do recognize. You recognize the numbers, but FATCA is a two-form world. It's a W-9 world or it's a W-8 world. A W-9 world is I'm a U.S. taxpayer, and a W-8 world is I'm not a U.S. taxpayer. Just remember that, and we'll come back to it. Lawyers like to tell you what the box means, though, right? So before I get to the data, let me tell you that what the box means. 2,000 pages, I've already told you in the regulations. It's never over, and the worst is yet to come. If it was just 2,000 pages, you know what? We already have a 50,000 page tax code and regulations. Actually, I think it's up to 75,000 now with the Tax Cuts and Jobs Act. But, you know, we can manage it. But FATCA, thank God, because if that was all it was, I might be afraid for, you know, my students getting jobs in the future. But FATCA actually made 113 new tax codes. What, Byrnes? I didn't see that. For FATCA to work, other governments legitimately said, Germany, France, Holland, China, Japan, our banks aren't going to give you in the United States, your IRS, your government, banking information from our country. That's illegal. Like, we actually have confidentiality and privacy laws. And US, you can't say anything about it because guess what? You do too. Just bring that home. If the IRS wants information from your bank about you, can the IRS just call up the bank? Well, they don't call anymore, but if they do, that's a fraud call, right? Probably a Nigerian fraud scam. But they'll send a letter. We would like to have information. Can they do that? The answer is no. It's private. There's a law, Bank Secrecy Act, BSA, which is a money laundering law. Bank Secrecy Act says information's yours. But the IRS will send you a letter and said, we would like you to provide us the information. Can they do that? Yes, the tax law allows them to ask you. What if you tell them, no, I'm not giving you anything. I'm a tax protester. The IRS can go to court and get a subpoena. And the subpoena, the court orders the bank under the force of law to provide the IRS that information. That's the way it works. A bank in Germany has your information. William Byrnes, would you please send us? We think We think you have a bank account in Germany. Would you please send us the information? No, I'm not sending you anything. Damn it. The IRS sends a letter to Germany. The German bank says, who's the IRS? I don't even speak English. I'm German. I speak German. You see the problem. They give it to the German government. They say, we got this letter. German government says, they have no right to your information. They're a foreign government. We're a sovereign nation. And so they made 113 to date intergovernmental agreements. That's between the IRS and a foreign government's revenue authority. And each of those agreements has what I call FATCA light, but each of them has its own provisions of what FATCA looks like. And they're different than the regulations. And each IGA, we call them, intergovernmental agreement, has to have, guess what? Corresponding regulations to make them enforceable in the country of concern. So Germany has its own FATCA. Cayman Islands has its own FATCA. China has its own FATCA. And none of them look like the US regulations. So you got 2,000 pages of US stuff. And then you got German stuff and French stuff and Cayman stuff. There's 129 new tax terms just in the intergovernmental agreements. Thank God that lawyers will have plenty of work for years to come. And there's different types of intergovernmental agreements. There's not one standard agreement, as you see on this slide. So, but Byrnes, I don't even have foreign clients. This doesn't even apply to me. So maybe I'm just gonna switch off this presentation. Ah, how wrong you are. Does your US client pay service fees to a foreign firm? Do you have insurance premiums being paid to a foreign carrier? How, and so on down the list. I'm going to answer these questions by the end of this presentation so that you'll know whether FATCA applies to you. And the answer is probably going to be, if you're advising, you're an accountant or an auditor for a US entity that's paying any amount to a foreign entity, you have to be aware of the FATCA rule and forms that we're going to talk about now. So what are forms? Forms is just a fancy way of collecting data and processes. Go ahead.
Excuse me, Professor Bill.
Oh yeah, we have a polling question.
First polling question. Mike will indicate whether I should, oh, here it comes. Okay. Does FATCA withholding apply to the sale of assets or stock by a foreign investor? So does FATCA withholding apply to the sale of assets or stock by a foreign investor? True or false?
And while you're answering that, I'll continue with America's a self-assessment system.
Please do.
And I'm going to show you a bunch of forms you're familiar with. We're just going to run through them, take a couple seconds per form. But the reality is that the government doesn't trust, for good reason, people to self-assess correctly. And so we have withholding tax, because it's not just a self-assessment. Even if you assess yourself correctly, the government doesn't trust you to pay correctly, to pay the right amount or to pay it on time, or both. And so we have a withholding system, like withholding from employees or withholding on payments to foreign persons, foreign taxpayers. And to make data, bits of data match, we have to have some kind of number that is common to the data that matches the data. And we call that in tax a taxpayer identification number. Here in the United States, we call it our Social Security number. So we're all familiar with the 1040 form, and what does the 1040 have on it? A Social Security number. What happens if you don't enter a Social Security number? The IRS rejects it. What happens if you enter a wrong Social Security number, either by accident or on purpose? Nothing. It still goes through. The IRS accepts it. But we have a verification problem and perhaps a fraud problem later on. But the form still went through. That is good form, corrupt, bad information. And of course, you have to have, income to be filing the form. So I circled, wages to start off with, because with wages, I can't remember how much I made this year. Don't worry, your employer sent you a W-2. And what does the W-2 have on it? Your Social Security taxpayer identification number to match with your 1040. And of course, it has your wages to help remind you, but also the IRS, who received the same information. And with the Social Security number, the IRS can now match 75,000 on this form to 75,000 on the 1040. But how does the employer have your Social Security number? Because you gave the employer a W-4 and you put your Social Security number. You don't even have to put your name. I mean, you do have to put your name. The employer needs to match it into its labor records, into the payroll. But regardless, if all you did was put your Social Security number on here, it's fine, because the only thing the IRS really needs is the Social Security number, because computers are really good at matching numbers. And if, by example, you receive interest from your bank, over $10 a year, you also got what's called a 1099. We're all familiar with this. 1099 INT, or interest, int, I call it. And it has how much interest you received, but importantly, it has your Social Security number, your recipient, that's you, your tax identification number, your Social Security number, so that again, the IRS can match it to your interest. How did the bank get that Social Security number? Well, you're not an employee. Employees do W-4s, so you're something other than employee. So everything not an employee, not a W, is a W-9. And the world is a W-9, W-8 world. And on the W-9, what does it ask you for? Your Social Security number. And by filling in a W-9, you're saying, I'm an American. How do I know I'm an American? I have a Social Security number. Yeah, okay, from a law point of view, because I'm a citizen. I have a green card. I've been here more than 183 days or substantial. Okay, but I'm going to keep it easy. I got a Social Security number. I must be an American. I'm going to show you. Maybe I'm not, but we'll get to that later. And then I got to certify it. I got to swear. That's the second bubble. On the 1040, it asked me under Schedule E for interest. Remember, I got a 1099 int, and it said I earned $1,000 interest. So I kind of put it somewhere. But on this form, Schedule E, look at the bottom of it. So I blew the bottom up, right? And the bottom says, FBAR. So hopefully you can see that big on your screen. I can't on mine. The F bar. So I'm going to get to the F bar just now. Most taxpayers don't file an F bar who need to file an F bar. I'm going to show you the statistics in a moment. But what is the F bar? Because nowadays, everybody should know. But reality is they don't, because 90% of the people who probably should be filing an F bar, 90%, not 9, 90% of the people who should be filing an F bar are not filing an F bar. So what is my F bar? It's an asset-based financial self-reporting for financial crimes. It's not a tax form. But if I don't file it, what is the penalty? With tax, we're used to, for those of us in civil tax procedure and so forth, if you commit civil tax willful fraud, which requires a clear and convincing standard, very high standard, 75% of the tax due, right? That's terrible. That's the worst that could happen. No, because F-bar is an asset forfeiture penalty. It's an asset-based form. What's your name? What's your taxpayer identification Social Security number? If you're filing an F-bar, you're an American. So you got a Social Security number. And how much assets do you have over, so you got to put your asset number. This isn't about income. It's about assets. And if you get it wrong, willfully, 50% of the value of the assets each year that you don't file it. So statute of limitations in tax, 6 years, 6 times 50% equals 300%. Let's say you didn't report $100,000. You could owe $300,000 as a money laundering penalty. We're not talking tax penalty. Maybe you owe $10 tax for those 6 years, $1.50 a year, plus interest, plus a little penalty, $10. Can the IRS still take 300%? The answer is, yeah, and they do it. And we could talk about that in the Q&A if you're interested, but it happens all the time. Also in the 1040, you should be aware of the 8938 because it's been around for almost 10 years now. It's been around for, for a good 8 years. And it's your FATCA form. You have to report your income that you earned from overseas. So if you filled out a Schedule E and you tick the box for, yeah, I think I should do the F-bar down, do you have a foreign account? Yeah, and it says, well, be sure to file an F-bar. It probably should also say, be sure to fill out your 8938. But your 8938 is part of the 1040 package. The F-bar is not. The F-bar is totally different. So I go and I fill out, sorry, excuse me, my 8938. Hey, but Byrnes, I'm not an American. I don't need to do any of this. That's fine. If you want to tell the bank that you're not an American, I already told you, fill out a W-8 BIN. And if you're not an American, well, then your country of citizenship is not America. Because if your country of citizenship, you're born in America, you got a US passport, you're an American taxpayer, done. If you're Brazilian, then it's fair for the IRS to want to, to ask the question, okay, you say you're a foreign taxpayer, so what's your foreign taxpayer identification number, your FTIN? Because if you don't have one of those, we don't believe you. Maybe you're really American with a social security number. Fair enough, right? So for the W-8 BIN to be fit for purpose, we say, that means to be correct with all the information matching up to where it's supposed to be in the correct form, you got to fill in all the boxes, including the FTIN. And where does that W-8 BIN information go? Does it go to the IRS? No. That stays with the bank or the payor, who you represent, your client. It goes on a 1042-S. Remember, a 1099 interest. If I'm an American W-9, then the bank sends me a 1099. W-9, 1099. But if I filled in a W-8, the bank sends me this form, the 1042-S. And the 1042-S says, Byrnes says he's a foreigner. Here's his, there's a FTIN, and this is how much money we paid. And, oh, by the way, foreigners owe U.S. tax. They owe withholding on source. They owe U.S. tax, and we're not going to collect it, so we use withholding instead, withholding at source. And okay, so this is just a 1042-S. I don't want to get into all the codes. That's the lawyer telling you what goes in the box. But I just want to show you it ain't easy. If I count how many codes can go into that Chapter 4 status code, look at the right-hand side of the slide. There's a dozen. There's a score of them. And you have to figure out what's the right code for that box. Because even if you put the right taxpayer identification number and the right withholding, if you got the wrong code, guess what? The form's not fit for purpose. And of course, there's penalties, which we'll discuss in a moment. But if everything works perfectly and everybody filled in the forms, submitted the forms, and the taxpayer identification numbers all matched up, there's no corruption of data, and it all transferred, blah, 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 blah. Symmetry. As Ronald Reagan said, trust, but verify. The IRS received from a bank or a company information that you also provided. You said that you had $10,000 offshore. The bank said you had $10,000, and so on. Everything matches. But does it really ever match in real life? We'll see some problems.
Excuse me, Bill.
Yep.
We have
another polling question.
Another polling question. I think Mike will get it up. I'll read it, and then you can continue. Form 8938 is a statement of specified foreign assets. Form 8938 is a statement of specified foreign assets. So please, while people are filling that out, continue.
So how does the IRS know if You say you got $10,000 offshore, or you say you got no money in a foreign account. How do they know? Because the foreign bank isn't filing a 1099 or an FBAR or a 1042S. They're foreign. Only US persons, withholding agents, people that the IRS can send the sheriff out to arrest. Those are the people who have to file forms. Because if the IRS can't arrest you, shrug your shoulders. Who cares, right? FATCA created this form, FATCA report. The 8966, the foreign bank has to file with the IRS, and there has to be a stick. Wait a second, you just told me that if the IRS can't send the sheriff for you, well, the IRS is going to have FATCA withholding. So we're going to look at that. And FATCA withholding is basically going to shut your bank, your foreign bank, out of the U.S. financial system. Of course, if your client, does FATCA apply to me? Does it apply to my clients? If your client didn't withhold correctly for FATCA, your client is on the hook for that withholding. Your client owes it. Foreigner owes it too, but it's a joint liability. And the IRS will collect from who the IRS can send the sheriff out for, which is you, not the foreigner. But anyway, with the 8966 that foreign banks are now strongly encouraged to file to the IRS. But Byrnes, you said that foreign governments don't let their banks send information directly to the IRS. Oh yeah, correct. So the foreign bank does an 8966, and the intergovernmental agreement, the 113 of them with their own terms and their own regulations, they send it to their local government, France. France packages them and sends all these 8966 to the IRS. Guess what? In a slightly different data format than the 8966 itself. I say that because whenever you change data formats, corruption, bad data, loss of data, incorrect, things get inverted, bad stuff happens, right? 113 countries all doing it their own way. Some countries like Cayman Islands may be sending it direct, they are sending it direct to the IRS, their banks, but France to the French government, who then receives it in French, of course, because they don't speak English, and they send it to the IRS. Google Translate, hope it works really well, and the IRS receives it. And it looks very French kind of data collection. But anyway, with all data, you got to collect it, verify it, remediate the problems, maintenance of it, make sure it doesn't get corrupted. The IRS receives it, they got to validate. There's reporting, there's all kind of juicy issues with data. The lawyers, we want to get involved in FATCA. We want to tell you how it's done right. But who actually is responsible for FATCA in an organization? So here's my fancy chart. This is a real operational workflow for internal controls. Where do I see the word lawyer fit in here? We don't, right? It's the accounts payable, AP at the very top. So accounts payable may every now and then ask who? The controller, who's an accountant. Who's you, right? They don't call up legal. They don't call up, even if they knew how to call up legal, they'd be like, oh, I can't call up legal. I mean, my God, the lawyers will think I'm doing something wrong. So, it just doesn't happen. So FATCA and who gets it right and wrong and the data collection, all this, it's you, the accountant, sitting inside of the corporation as perhaps the controller who has a bunch of accounts payable people working for you who have to make sure that the forms collected are collected with the correct information. Correct meaning numbers in the lines, that the numbers in the lines actually are the numbers that are supposed to be in the lines, right? Geez. But I mentioned not a lot of people are actually like, why do we have to have FATCA again? because maybe not a lot of people, at least according to the IRS, and at least according to the people who stood in front of Congress and said $180 billion of income loss each year. And so I'm just going to cut to the chase, and the answer is, for the FBAR, there's only 1 million filed. But as you can, if you read the slides, there's perhaps 10 million taxpayers who should be filing the FBAR. 100 million W8s, W8 bends, needed to be replaced for FATCA. How many were done correctly? How many not correctly? But more likely than not, because of the way FATCA works, which we'll get to in a moment, and then we'll be closing up soon, it's 900 million W8s that have to be. 900 million, a billion W8s. How many mistakes are there going to be? Well, what we learned from QI and from the IRS's own information about how long it takes to do these forms is that, generally speaking, more than half of the forms are submitted incorrectly the first time. With QI, only 35% of the forms when audited actually were correct on every facet of it. 65 were incorrect. So only about half come incorrect the first time. They need to be remediated, checked, verified, and all this. And so here's the rub of 900 million. Whenever you walk into a bank, anywhere in the world, United States or foreign, the bank has to assume under FATCA you're an American. You're an American, and they've got to report you to the IRS. But I'm in India. I don't even speak English. I speak a local Indian dialect. I speak 10 of them, but I don't speak English. And I'm in an Indian bank. Well, India has an IGA with America. They're going to assume that you're, of course, they're not really going to assume you're a W9. But the only way they can say you're not an American, they have to have a W8 or its equivalent with the same information on file to prove you're not an American, so that they can find William Byrnes. How many billions of people in the world? 7, right? How many Americans in the world? 300 million. How many of them potentially with overseas accounts? 10 million. So 7 billion people have to be, harassed is a big word, but need to fill in a W8 bend to catch potentially 10 million Americans who may not be telling the truth. But in reality, I think most of them are, but okay. And on this W8 bend, how many choices do I have to have? Remember the 1042S? I had all those choices. Here on the W8 Ben E, it's a W8 bend for entities. I have a lot of choices also. In fact, you see that? 32 choices. I got 32 choices. Each of them has a different legal meaning, and it depends on the IGA and so forth. Okay. And W8 Ben E's, the IRS estimates it takes over 25 hours to fill it out. And how much does it cost? Well, FinCEN told us to fill these forms, the equivalent of these forms for the United States banks, for the ultimate beneficial owner forms that started in 2018. FinCEN told us it would take about 7 million hours a year. Put 2 zeros after that. Just say a person hour is worth $100. That's 700 million. Cut it in half. $350 million a year. That's what it costs. And $10 billion. This is government figure. It would cost about $10 billion in software upgrades. Geez, accountants. There's a lot of money to be made, right? And just because you upgraded software, you got to maintain it. You got to update it. Just like tax software. Every year it's got to change. And what we learned is that most payers up until, at least 16, I haven't looked at the most recent figures because I'm Indian, but 71% of them, small business, right? They're not GE. They're not IBM. They're small business. 71% of them don't have an electronic system. They're still using paper. And the point is that most of them, like, they see these FATCA questions, and this slide says they answer it wrong. Mm-hmm. Hey, 32 choices? Of course they're going to answer it wrong. They need to consult you, right? Every time they answer it wrong, like a 1042S, per form, it's $50. You can read this slide later. But if you're a large company and you're doing payments all the time throughout the year, you're going to be quickly in the potential, and you're filing them late. I might file it on time, but the information's incorrect. So I didn't file on time. It's not on time until I filed it correctly. So if I'm not doing it intentionally, it's just by error, says the IRS, I'd still owe up about $3.5 million. But if the IRS says it's intentional, $550 a form and no limit on the penalty. Some companies are doing 10, 20,000 forms a year, 10 to 20,000 payments. Think if you're a bank, your client's a bank, it's of course doing 10 to 20,000 wires and payments overseas a year. There's a lot of validation that goes into the W-8 bennies, but here's the main point. The client filled it in, but you're required to check it. You're required by the FATCA law to go through it and by anti-money laundering rules to check it against the publicly available information and the internal available information. And you got a standard of care. One's actual knowledge, but another one is should you have known knowledge? And should you have known is, well, they said that they weren't an American, but you had an American address and an American telephone number in your file. Should you ask them to see their foreign passport to say they're not an American and their foreign taxpayer identification number and their foreign tax filing? I mean, you should have known to ask that, right? Okay. So it brings up the foreign taxpayer identification. They're not an American? What's their foreign taxpayer identification number? How long are these W-8 bends good for anyway? The general rule, 3 years. Every 3 years, you got to go back out and replace it. How long does it take to get a W-8 bend from a client? So the industry says it can take as long as 7 months on average. 7 months.
Wow.
Remember the 1042S penalties? Geez, you're 3 months out. You're already at the high rate of penalty, right? 7 months not to have the information correct is a long time. So, and what happens if you don't get the information correct? You probably didn't withhold correctly. If you didn't withhold correctly, 25% penalty. And of course, you also owe the withholding. Withholding plus 25% of the withholding. So how much is the withholding? It's 30% of, and for this slide, also of, for those of you in tax, you're like, but the tax code exempts interest on portfolio and bank accounts from withholding, but FATCA doesn't. Now, here's the question that was asked in the first polling question. I'm going to give you the answer because it's confusing. Does FATCA require withholding on capital gains? Does it require withholding when, or on gross, when you sell the bond or you sell the share on the gross amount? The original FATCA rules said yes. In late 2018, the IRS published an updated regulation that said, updated notice that said, we're not going to make you withhold on proceeds. That's my next slide. We're not going to make you withhold on gross proceeds from the sale of shares and bonds and so forth, at least at this time, because frankly, it might collapse the US banking system, but they don't say that. They say, well, it's very complicated. And you know what? People are actually following the rules now. It does. Because people are following the rules now, we don't have to worry about it anymore. FATCA works. But we're in a COVID time, and it'll bring me back to the beginning, and I'll just kind of tie it up now. We're in a COVID time, and we need to extend unemployment benefits again. And did FATCA work? If FATCA is only bringing in $300 to $400 million a year on withholding, that's a fact. It's a treasury figure. And it was supposed to bring in at least $800 billion, according to JCT, but the expert said $180 billion. Geez, there's a lot of money left on the table, and I need to extend $600 a week unemployment benefits, $2,400 a month. I need $35 billion to do that. Thank God. These Americans, they're hiding their money out there. And these withholding agents know it. And if I can't get the money from the Americans, where am I going to get it from? The withholding agents. And who represents withholding agents? You, the accountant, because you're the controller in the company or who's doing the audit of the company. It's not lawyers doing the audit. It's you, the business school graduate who's doing the audit. So these slides are just saying, and you thought it was easy? A W-9. You know how many mistakes are made with W-9s? And that's about me in America. You can imagine when you got 32 choices on the W-8 band E, how hard that's going to be. And, disregarded entities. Who knows what those are, right?
Bill, I'm going to
So,
ask my last polling
go ahead.
question while you finish up. I think it'll come up here. It's a good time for it. Most FACTA and W-8 users understand U.S. tax and are U.S.-based persons. Most FACTA and W-8 users understand U.S. tax and are U.S.-based persons. If you miss that, then Professor Byrnes is coming to your house.
So I'm going to end with this. Do foreigners even know that they're supposed to, comply with FACTA? Well, one, the U.S. withholding agent who you represent says, I need to see your global identification number, your GIIN. And they, well, what's a GIIN? And they said, well, you have to file with the IRS to get a GIIN. And they go, well, how do I do that? Okay, they figure it out. They go to the website. And they go, well, I'm not a foreign financial institution. I'm a trust company. Foreign financial institution doesn't mean bank. It means even a holding company or a treasury management center of a multinational corporation, depending, there's a lot of legal definition. Oh, and guess what? Each IGA might change the definition a little bit. So you got the regulation definition and 113 other possible definitions of what is an FFI, foreign financial institution, who needs a GIN to give you the GIN so that you can fill out your 1042S correctly. And what if I'm not an FFI? Well, then I'm an entity. And if I'm an entity, I must report my shareholders to the withholding agent. And the shareholders, guess what shareholders have? A W-8 Ben. I'm not an American. Don't report me. Okay, but I need to tell them you're not an American. So I'm not going to give them your name, but I got to tell them I got a W-8 Ben. Oh, you wouldn't give me a W-8 Ben? Guess what? You're a W-9. You're an American. And I got to tell them you're an American. I'm not giving you my social security number. Well, I got to tell them, and here's a magic word, and I'll end with this. You're recalcitrant. Recalcitrant. Recalcitrant means tax protester. Recalcitrant is a way of telling the IRS through the IGA system. French bank tells French government, who tells U.S. government, who tells, goes down the chain and says, the French bank has somebody who refuses to fill out a W-8 Ben. They must be an American. So now the IRS sends a notice to the French government, says, we would like to know any information from Bank Suez on any Americans that they have. We know that they have an American because we have this report that says they have somebody who refuses to fill in a W-8 Ben with the correct foreign taxpayer identity national. The bank told us, because if the bank doesn't tell us what happens, 30% withholding on all their clients. Right. So, okay, there's an IGA and it ameliorates the governments, France doesn't want that to happen. America doesn't want that to happen. They're going to work it out. But I'll end with the last statement. FACTA has been around now for 10 years as law, but 8 years really is regulation. And the IRS in the last year has started major campaigns against companies and withholding agents for 1042Ss. Are they correct? They're auditing. Number two, against foreign banks. Are you following our law, FACTA regs, or your law, the IGA regs, correctly? Meaning, are you telling us when you have Americans and when not? And how do you do that? You got to audit. And how do you audit? They get a local person. And what does a local audit firm do? Local accountants. They go in there and they say, does every account have a W-9 or a W-8? We're W-9, W-8 world, folks. And with that, I'll end. I'm not talking about OCD, but thank you very kindly. As we say at Texas A&M, gig 'em. I'm going to stop sharing my screen and let's get to some Q&A.
All right. Bill, fantastic. And man, you brought the complexity down to earth. So thank you. Thank you so much. Much better understanding of FACTA and its importance. And now, does anyone have any questions for Professor Byrnes? Please put them in the chat box and Mike Woolman will post them or them. There's Mike, he's back.
while anybody is entering their questions, I will say, Professor Byrnes, for somebody such as myself who has zero tax background other than being a taxpayer, I am absolutely just, I am absolutely energized by your passion for the subject and your delivery. So even something like FATCA, you know, which I have never had any type of understanding of previous to now, you know, I can't thank you enough. And I will tell you that being in your class must be a thrill, to be honest. So, yeah.
There are not a lot of professors who are hiding or stashing accounts offshore, Mike. That's why you're probably
so in the meantime, as we've mentioned, does anybody who's participating, we have a good sized group here today. We also have some folks that are watching on live on Facebook. Any questions, feel free to utilize our chat box. We know that we're a minute over our time and your time is precious. So feel free to go ahead and post them up in here. Unless Professor Byrnes did such a phenomenal job as he has explaining it, you don't have any questions. We'll see.
that could be. Bill never gets questions at conferences because he.
So I'll give you an example. American payor, let's say engineering company, oil company in Texas. You're the accountant, you're the controller. Here's my question. They're going to pay a foreign engineer, foreign. The foreign engineer tells the company, so the company says, listen, I need to pay you, but to pay you, I have to file one of these, like 1042. I got to file this form with the U.S. government and say, you know, withholding form. And it has a FATCA thing up there. And I, got to fill that in. So I need to know, if you're American, I need you to do a W-4 or a W-9. I'm not American, I'm foreign. Okay, I need you to do W-8 then.
W-8.
Okay. On the bend, they say, listen, I may have a German passport, so they don't put German national, but I live in Cayman Islands. I'm not subject to German tax, so I don't want to put my German foreign taxpayer identification number in there. Okay, put your Cayman Islands identification number, and of course, we need to should have known standard. So we'd like to at least see a utility bill or address, a rental agreement, something, right? Do I need to go that far? And what is the taxpayer identification number I should have? Because Cayman Islands doesn't have tax, right? So it doesn't have taxpayer identification numbers.
Right.
The answer is, well, I got to mail, I got to put in my system, my payroll system, I'm going to have an address. That's normal, right? I can't ignore what's normal. And so I'm going to have an address. And so they're going to have a Cayman Islands address. What if they list a P.O. box? Bing, 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 the actual regulations say, wait a second, P.O. boxes aren't, it has to be a real address, right?
Real
so
address.
that all of a sudden my standard starts to go up. And I go, well, you list a P.O. box. How do I know you really live in Cayman Islands? Do you have a Cayman Islands taxpayer identification? Oh, Cayman Islands is going to have taxpayer identification numbers. Well, you know what? Cayman Islands can still issue a letter. They know you're in Cayman Islands, because you know what you got? A work permit, a living permit. You got a residency permit, right? So they can prove that you're there. I don't want to give you a German foreign taxpayer identification number. Okay. Then where's your Cayman Islands residency certificate? Fair enough question to ask. Banks should know to ask that question. You don't ask it, the controller gets in trouble because the withholding agent, the accounts payable, did it wrong. And you owe the withholding, if there's withholding, and guess what? There's withholding in Cayman Islands, 30%. So there's 30% withholding. Even if the fact information's right, you still got to withhold 30%.
Wow.
So you owe the 30% plus the penalty. If they consider it willful, it's going to go up to 25%. So these kind of questions are the kinds of questions you're going to actually encounter in real life here in Texas, and so you need to be aware of it.
Good. Thank you once again, Bill. I guess one last time for any questions. That was a great example. I think the point is for all the practitioners on this call, you better become broadly familiar with this. I guess, Bill, it's something you got to start talking to your clients about to understand, if they have these types of accounts.
Download the slide deck, go through the forms. You're going to recognize all the forms, but you may not have put them in the context of what FATCA, which is Chapter 4 of the Tax Revenue of the Internal Revenue Code. You may not just put them in the context of FATCA before. You may have been thinking about, I get FDAP, source-based withholding. But now that you heard this presentation, you're going to look at those forms in a new way. And you're going to be able to present it to your clients and say, geez, yesterday, this was a $1,500 billable question. Today, it's a $10,000 billable question.
Right. So, perfect. Well, thanks again, Bill. You are, particularly busy. We can't thank you enough for appearing. It was great. You are, we saved the best for the last. And so thank you so much. All right.
Cheers, y'all. Thank you kindly.
All right. Bye. Bye-bye. Take care.
Take care, everyone.
Bye, everyone.